Hello everyone, thank you for tuning in to this Your Overseas Home webinar, which we've called Navigating Your Finances in Portugal. So during this session we're going to focus on financial planning and tax considerations when you move to Portugal. My name is Richard Way. I'm a member of the Your Overseas Home content team and I'll be hosting the session. So it's great to have you all with us today, whether you're watching live or catching up on demand. So let me introduce today's specialist, the person who will be providing us with all the valuable information, and that is Rob Thornton, who is from international financial services provider Holborn Assets. Rob is an experienced financial advisor whose day-to-day work is helping expats from all over the world and homeowners in Portugal with cross-border wealth management, taxation, and I believe golden visas as well. So welcome, Rob. I know you were in sunny Spain.
Thank you. Yeah, thanks for that introduction.
Okay, as a quick guide to today's format, the webinar is about 30 minutes, and for around 20 minutes or so, Rob is going to give a presentation, and then we're going to welcome questions as well from our audience. I've got a few questions that I might throw into the mix if need be as well, Rob.
Yeah, no problem.
To ask a question, please use the questions tool, which you should see on your dashboard, and then I'll pick those up and I'll field them to Rob. So yeah, having Rob available today is a great opportunity. He's given up time to come on the panel, present, so do make use of it. Okay, Rob, over to you. Tell us a bit about Holborn Assets as well to start with.
Yeah. Okay. Look. Yeah. Thank you very much. Thanks for the invite as well. So Holborn Assets are an international wealth management company, originally based in the Middle East in Dubai 25 years ago, and now we've got offices and jurisdictions all across the world. So everywhere from Hong Kong, South Africa, Saudi Arabia now, Cyprus, obviously Portugal, obviously here in Spain, and we also have a US affiliate as well. So we're kind of a broad spectrum, and we look after people's financial life, I suppose. One of our tags is right money, right place, right time. So that encompasses anything from pensions, pension transfer, lump sum investments, life insurance, foreign exchange, anything that kind of comes across your financial life, and that's what we do. We've got about 20,000 clients globally, and I think it's about 18 offices. I can't keep count myself sometimes, about 350 people. So that's us.
Okay.
All right, so should we crack on with...
Let's get into the presentation. Yes, please.
Living in Portugal. Okay, so this is the kind of topic and agenda that I want to run through today. This is really short and to the point. I can't stress enough that you should speak to a qualified financial professional on a one-to-one basis, and it's on every slide because you need to understand, everybody's specific situations, and everything is bespoke. So we're going to talk about tax residency in Portugal, paying the tax in the correct country. Sounds obvious, but perhaps it's not always. A little bit about pensions, ISAs and other investments if you're coming from the UK, particularly over to Portugal. A little bit about the Portuguese investment bond and how that can help, and a kind of general run through of taxes in Portugal. And finally, I put together a kind of a-dos on your move. So things that you should be doing either prior or post your move to Portugal. Okay, so let's just talk a little bit about tax residency. People get confused with this. There are a number of tests depending on which country actually you're residing in, but generally speaking, the international tax residency is gained in any one country if you stay more than 183 days. So 6 months and 1 day living in Portugal, you're a tax resident. 6 months and 1 day in Spain, you're a tax resident. There are other tests. And one of those kind of common tests is if there is a, how should we say, a dispute, is where your center of economic and cultural interest is. So if you're claiming to be tax resident in one country like Dubai, but you know, spending, you know, kind of less, just fractionally less than half your time in Spain or Portugal or France, but your family lives in that country, your kids go to school in that country, well, that would be your country of tax residence. In the UK, we've got things like the statutory residence test as well. That's kind of fairly well proven route, been around for many, many years. Now the NHR, and for those of you who don't know what the NHR is, it's the non-habitual tax regime for Portugal. Now that stopped in 2023. And I mention that because it's been a major driver of people moving to Portugal and protects them from a great deal of tax. We do envisage that will come back at some stage in a slightly revised format, but I'll touch on that a little bit later. Okay, so why do I put pay tax in the correct country? Well, sometimes people get a wee bit confused. I certainly come across clients who say, "Oh yeah, it's okay. I'm paying my tax in the UK." Yeah, but you're living in Portugal. Oh yeah, but that's fine. No, it's not. So let's just run through some things that should be and examples of. So state pensions and government funded pensions retain taxing rights in the country of origin, and that's generally globally. So for example, if a gentleman or lady was working for the police in Portugal and they had a pension but they were living in the UK, the Portuguese authorities still claim rights over taxing that, if there is any tax to pay. If you have a SIP or a CUROPS or a defined contribution pension and you're living in Portugal, clearly you'd be taxed on that as income. Now, the way that it's worked is that the state pensions that you receive or government funded pensions are kind of added to your total income. They're not taxed in Portugal, but it pushes up the other bits that you may have to pay tax on. So if you're a tax resident in Portugal, you pay your taxes in Portugal, end of, except for, and there are a few exceptions obviously, things like UK property income, where you'd pay it in both countries. You would pay your property income declaration in the UK, and then you would declare that to the Portuguese authorities as well, and you'll pay the difference. And shall we say the Portuguese authorities are not quite as generous, so you usually have to pay maybe 4, 5, 6% more to the Portuguese government. Okay, so what about pensions, in terms of that taxation? And this is a big thing that people get wrong when they plan a move to any country, quite frankly, is they think they've got a pension in the UK, they might have paid into it for many years, it might be an auto-enrollment, it might be a company pension, and they say, okay, I'm going to take out my 25% tax-free allowance and put it down as a deposit or buy a property or whatever that is. And they do it when they get into the country of residence. Well, PCLS, pension commencement lump sum, is only tax-free in the UK as a UK resident. So you need to plan accordingly for that. If you move to Portugal, it's taxable as income, and it's taxable as income in one big lump sum. So that's a real common misnomer. And we touched on there earlier, the government ones are exempt from that taxation, but there are no PCLS allowances on that. One thing also in terms of pensions, which is kind of good advice, when you're moving overseas, you do have an opportunity actually, if you've not already reached the kind of 35 years of contributions, that you can top those contributions up using Class 2 contributions. So I advise a lot of my clients to do that. And it saves them tens of thousands of pounds. So always have a look at that. Go onto the government gateway, get your NIC contributions, your pension forecast, and usually send it to somebody like me, and we'll give you a little bit of advice on how you can maximize that. Okay, so what about ISAs, other investments, stocks, shares that are not in a tax wrapper that perhaps you have in the UK? So it's quite common for people to have, a UK bank account, savings and investments like this, like ISAs, which are, tax protected. They're good. Yeah, it's the first port of call. Okay, well, they're not so good when you move overseas. So let's take Portugal on an ISA, taxed annually at capital gains tax rates, which is 28%. So you have to declare at the end of the year, declare at the start of the year, each year, and pay the capital gains tax on that, regardless. It's the same for premium bonds. In fact, premium bonds are worse. Premium bonds, okay, let's just touch on that one for a second. Premium bonds in Portugal are classed as gambling. So you have to pay tax on your winnings, and you have to pay tax on your winnings at 35%. So that's an interesting one. But other stocks and shares, etc., that are in those tax wrappers, they might as well dissolve because they're not a tax wrapper as far as Portuguese tax system goes. Bank interest, another one. Again, in the UK, you do pay interest on your bank account, the interest. Sorry, you pay tax on the interest that's generated on your bank account, but there are some quite generous allowances. In Portugal, it's taxed at 28%. If it's coming from a tax haven, tax havens being Gibraltar, Jersey, it's taxed at 35%. So there are options, though, to use investment bonds. So these are effectively investment bonds almost identical to the ones in the UK, but clearly they're approved and regulated by the Portuguese authorities. And that's a way that we do as financial planners, help people to reduce those taxes quite substantially. So a little bit about the Portuguese investment bond, how it works. It's taxed as an insurance product. That's really, really key. And that is why it's so tax efficient. It's designed to be held for a minimum of 5 years, and really 20-25 years is an ideal term. It can provide monthly income, so you can continually be drawing down from it, again, in a very tax efficient manner. In Portugal, there are some, I should say, added benefits as well. So these products are around all over Europe. However, in Portugal particularly, if you hold it more than 8 years, the effective tax rate is only 11.2%. And that's on the growth, not the capital. The capital is completely tax-free. So it's extremely attractive for people that we work with that are planning for the future, and especially post NHR. And there's no tax on death benefits either. So again, obviously a lot of people that are moving to Portugal, perhaps kind of my age, later on in life, those are the kind of things that you do have to consider. Okay, and sorry, and finally, you have a wide range of investments, global providers, global investments, pretty much a similar range of products that you would have in the UK or in continental Europe as well. So let me just touch on some of the taxes in Portugal. Again, might just be to give you a bit of a reminder. So when you're doing your budgeting and you're doing your forecasting for your move, this might help. So pretty straightforward. Wealth tax is something that you need to be aware of. So anything over 600,000 per person. So if you're a couple, 1.2 million, sounds a lot of money. But if you're owning a property and you've got some cash in the bank and you've got pensions that are coming into drawdown, that can quite easily be reached. And you've got a taxation rate of between 0.7 and 1% per annum. And again, it depends on the region and it depends on the types of assets. Income tax, obviously, it's pretty much the same as most European countries, staged, the same as the UK. The allowances are not so good. They don't give you so much tax-free allowance to start with. and the rates can go as high as 48% as well. So if you're earning substantial amounts, the top end is 48%. Capital gains tax, excuse me, is 28. Now that's a lot lower than the UK currently. Maybe tomorrow, Chancellor Reeves will find out that it's going to change. That's one of my predictions for tomorrow anyway. So it's currently 28%. You've got your property and local taxes, kind of like your council tax in the UK, for example. They're not usually substantial. We're talking, 5, 6, 7, 800 euros a year, perhaps. That's all. And obviously you've got what's called EVA, so you'd know it as VAT, sales tax. Goes up to a maximum of 23%, so it's actually quite high compared to a lot of other European countries. However, there are lots of exclusions and lower rates. Things like baby milk, baby powder isn't taxed at all. Different food products, different services like medical services, etc., are not taxed. So here I've put together a kind of list of things that you should do, okay, of your move. So whether it's before or after. So first of all, obviously you need to book a meeting with us, and at the end of this presentation, there's my contact details, and there's a QR code, or there's my email address, or there's my WhatsApp phone number. But book a meeting with us, ideally about 6 months before your move. And that's to start, getting things in place and start doing things or start thinking about things. Sell your main residence before becoming a tax resident in Portugal. Why? Well, because it's tax-free in the UK. Your main residence has no capital gains tax on it. And with property prices over the last, 2 decades, I would imagine there's a substantial amount of gain there. Once you become a tax resident in Portugal, your main residence is no longer in the UK. Therefore, it's taxed at 28% on the profit. So that's a big one. Consider liquidating other assets, and obviously take advice on that, and place into tax wrappers when you get to Portugal. So things like ISAs, if you've got an investment bond in the UK, even bank accounts and things like that, consider those and put those together. And again, sit down with a good financial planner and bring all that together as a journey, really. And when you're settled in Portugal, or when you've got your proof of residence and you've got sorted out, because you don't always want to be dealing with finances and all the things and paperwork, that's when to move forward with us. And again, going back to that PCLS, that's really important. Take PCLS before leaving the UK. I can't say it any clearer than that, because if you take it when you're a Portuguese tax resident, post NHR, you'll be taxed on that as income. Okay, a couple more. Obviously inform all of your institutions of your new address. Sounds obvious, doesn't it? Well, I deal with a lot of pensions and a lot of pension companies. You'd be amazed how many people move and don't tell the pension company, for example. Also, life insurance companies, put it in writing and confirm that you are still covered when you're living in Portugal. You should be, no reason why not, but you need to put it in writing and tell them. If you don't, they could theoretically come back to you and not pay out a claim, for example. Complete HMRC notice of leaving. So the tax years are different in Portugal to which is a calendar year, to the UK, which obviously is from April to March. But you need to complete that form to tell HMRC, I'm going, bye-bye. I'm not going to be paying any more UK tax. And you could be due a rebate as well on the back of that because of the way that the coding works. Obvious again, but perhaps not always obvious, update your will in Portugal and in your home country. So go see a lawyer, go to the notary, do your will in Portugal for your Portuguese assets, because if not, they'll be distributed by forced heirship unless and this is part of European legislation, you select to have your assets distributed according to your home country, which would be the UK, and update your will in the UK. That's a bit easier. To be honest, you can do it on the back of a fag packet almost, because it's based on common law, but it's good to go to a solicitor and just get them updated. Okay, those are my contact details, and I get the feeling that Richard is going to fire some questions at me now.
I will. Thank you very much, Robin. Very interesting. Actually, we've got a question from the audience, so we'll start with that. It's from Antonio. I think you may have answered it, but he said, if I were moving to Portugal, do I have to pay tax on my state pension in Portugal?
Yeah, no, you're right. I did run through that. So your UK state, excuse me, your UK state pension, no. The caveat to that is if you have other income that's been generated in the UK. So if you were getting dividends or you owned a company or whatever, but generally speaking, no. The taxing rights remain in the UK, but absolutely nothing on your state pension in Portugal. Other pensions, yes, they're part of your income.
So the Portuguese tax office recognises that the state pension income you receive has been taxed, and they won't tax it again.
Yeah, that's right. I mean, the taxing rights remain in the home country, full stop, and that's the same for a lot of military, police, NHS, if it's state-funded NHS, not trusts, and so forth. So yeah, that's exactly how it works.
Okay, thank you very much. Hope that answers it, Antonio. Rob, just give us an idea of the range of your clients. So I'm imagining that you've got international clients, so American, third nationals. Who perhaps are expats already in another country and they're moving to another country, because there's quite a transient community, isn't there, of people who work in corporate world who have pensions in different countries, and I'd imagine their economic profile is quite complicated. I mean, are these people who especially need someone like you to sort of bring everything together?
They generally do, because I mean, certainly in terms of the profile that we have, I mean, first of all, no, there is no one singular profile. With my clients, with the company clients, my personal clients, I've got about 120. They're from, frankly, from multimillionaires to people who have, transferred £100,000 pension to Spain, or it's somebody moving from France to Portugal. So it's a wide range. Again, it's bringing all that together. So you mentioned there that a lot of people can be quite transient. You tend to find, I think in the expat world, like myself, I've done it, I've been there, I've done 11 years in the Middle East, I've done 7 years in Spain. We're getting that 7-year itch now. So you accumulate bits and pieces all over, don't you? Whether it's pensions in the UK, whether it's, a benefit from an employer, or whether it's just straightforward bank accounts. So there generally is opportunities in financial planning. I've never ever met anyone that's taken good quality professional advice, whether it's from us or it's anyone else, and has not benefited from that in some way. So just simple things like, maximizing your state pension as an expat, although I think Chancellor Reeves might be having a go at that tomorrow. And as you just mentioned there, the kind of complicated bits and pieces, you worked in the US, you've got a 401k, you've got a Roth IRA. So again, at Holborn, myself and a lot of the team are qualified to American standards, as well as, European and UK as well.
Yeah, and I imagine for a lot of your clients as well, it's not a one-off service, it's an ongoing thing, because
absolutely
the situation is going to change, so you'll stay with them throughout their lifetime almost. Well,
absolutely, yeah, and that's quite frankly how we grow as a business, because in terms of revenue and how we generate our revenue, if it's assets under management, we're typically charging a very small fee for managing those assets, but it could be 15, 20, 30 years. And personally speaking, I've just had my first set of intergenerational referrals. So I've been looking after the parents for 15, 20 years. And now I've got the children, they're like 25, 30 years of age, now coming to me saying, look, you've done this for mum and dad, can I sit down with you? It's very much a long-term view. And also, again, as people's lifestyle changes, lives change, people get ill, they get divorced, I'm afraid, people pass away. So there's a whole huge moving feast of information, working with a good financial planning company.
Okay. Right, we've had a bit of a flood of questions, so let's get stuck into some of those. I'm going to work my way up in chronological order. So, question about an NHS pension, which is a government pension. Is it taxed in Portugal or the UK?
Yeah. Okay. Again, it's similar to Antonio's question at the beginning. It depends how it's funded, and the pension trustees will be able to tell you that. So if it's an NHS trust, which is effectively privately funded, it's not privately funded, but it's a trust. That's slightly different because a government-funded NHS pension is 100% not taxed in Portugal. So it's going back to that question right at the beginning. However, if it's privately funded in some way, it is then treated just as a normal pension. So you would pay tax on that income. Okay.
So I think the answer to that is to speak to someone like Rob to check it for you. Yeah.
Yeah.
Because there are obviously discrepancies between how it's managed and pension.
Yeah.
Brilliant. Thank you very much. One about the NHR. Surprise, surprise. JB says, I thought this was still in place, but for skilled workers only. And you mentioned that it's possibly coming back. And what do you feel about when it will?
Yeah, so Jamie's got a good point. Yeah, he's got a good point there. Yeah, he's got a good point. There's still the skilled, I think it's probably getting a little bit of confusion. There's a skilled workers visa. And with that visa, you get basically tax benefits to attract, let's face it, talented people into the country. So it still carries on. NHR stopped in December 23, actually quite abruptly as well. And it's really because, a quick explanation of why, because Northern Europeans, particularly Norway, Denmark, Germany, Belgium, were taking their pensions and basically living in Portugal. So instead of paying income tax in Norway on their pensions at 30–40% and Germany at the same, they were living in Portugal and paying 10%. So the Northern European countries are clearly quite upset by that and made representations to the EU, and there was a lot of pressure put on Portugal to stop it. And that's why it was abruptly stopped, basically. We think as a company, and from speaking to our contacts in Portugal, and these are lawyers and accountants and all the kind of professional services, it will come back because it was a big driver of foreign direct investment into Portugal. We think it will come back, perhaps not quite so generous, because it was very, very generous. It's a 10-year program, and there's not many places in the world that have that.
Okay, so wait and see. Yeah. Thank you. An easy one. I think I can answer this. Do you have offices in the UK? You do. You don't, in London?
No, we don't actually at Holborn. No, not anymore. We only focus on the international market, so we don't provide advice to UK residents. So no, we don't.
Okay. But obviously with technology today, you're doing things like this over Zoom and meetings on Zoom and
Yeah,
FaceTime.
exactly. I mean, perhaps a bit better explanation of that is if we cannot provide and we will not provide regulated financial advice in jurisdictions where we don't have the regulatory authority to do so. So, excuse me, we just won't do it. You know, if it's general, I'm moving to Portugal, a meeting, you know, that's absolutely fine. It's no problem at all. It's not regulated advice, but we certainly wouldn't sit down with someone who's a UK resident and do a financial plan for them. You need to go see a regulated, FCA regulated in the UK financial planner. Again, if you need that, I can help out with that because obviously we refer clients back and forth as they then usually, you know, move to Europe, for example.
Okay. Another one about the NHR. Dion says she seems to have benefited from an extension for residency applicants before December 2023. So she obtained an NHR at the start of April. I'm guessing she means this year.
Yeah.
Can you remind me how this will affect how I pay tax in the UK and Portugal?
Well, it's not a simple answer as usual. However, if you got onto the NHR in April, you're good for 10 years. That's the bottom line for it. So well done, first of all, because that's it's a major plus. NHR and basically limits the amount of tax you can pay in Portugal on pension, basically passive income generally. So pensions, rental income, things like that. And basically, if it's already been taxed in the country of source, you don't pay tax again on it. So a good example of that is, let's think, if you're getting dividends, bank interest, things like that, if it's already been taxed in the UK, it will only be taxed in Portugal if it breaches the barrier, which is basically 10 or 20%, depending on what type of asset it is. But generally speaking, pensions, for example, are only 10%. And that's for again, going back to the pensions question, it's the private pensions, it's not the state pension.
Okay. And you kind of referred to it just now. Another question from Jeff is, how important is the UK-Portugal double tax treaty?
Yeah, it's very important. It's fairly similar to most other European countries. Basically, the DTA, I mean, for those who double taxation agreements are for those that are not aware of them, basically countries around the world agree not to double tax people. So if you're a resident in Portugal and you're being taxed there, but the income is coming from the UK and they're taxing it there, that won't happen. So that's to stop that. And there's various bits of policy around, for example, you know, again, going back to those pensions, the ones where taxing rights remain in the UK. So DTAs are very important. They are less kind of, I won't say less important, but they are not as prevalent in Europe anymore, because generally speaking, most of it was covered by European legislation. Now, some of that legislation post-Brexit still hasn't been ratified, so there are still one or two grey areas at that end. But generally speaking, everything is as it was, during those pre-Brexit days, shall we say?
Okay, thank you. Just conscious of the time, we have had a couple though about the process involved in appointing you and fees, and so let's just talk about that. And then there are some other questions quite specific which people can raise after this. So just talk us through the next stage if someone wanted to engage your services and when the fees kick in and a guide.
Yeah, sure. I mean, first of all, obviously there's a QR code on screen. There's my number and my email ID. So we offer a free consultation. It's kind of a discovery meeting We say 30 minutes. I don't think I've ever kept one to 30 minutes because I talk too much, so apologies. And that's really to see if we can help you. Sometimes we can't, but I will know someone who can, if that makes sense. So if it's a specific issue or it's something that's out of my jurisdiction. When we deal with kind of fees, it depends on the products and the service. But generally speaking, most of our product providers, we receive an upfront fee for doing all the setup. So for example, a client comes to me and says, "Look, I've got £100,000 to invest. What can you do for me?" We would typically charge 3+1, which is the same as the UK. So it's a 3% upfront fee, which is taken from the product. That's to do all the work, all the initial fact finding, the recommendation. And then we put you on a service proposition and we charge 1% a year for that. And that it comes out of the investment. So we're aligned to the client because we earn more money if the client earns more money. So that's it in terms of investments. Other products, for example, life insurance, again, it's the same as in the UK. The life insurance provider pays Holborn Assets a commission. So it's the same, it's pretty much the same in that respect in the insurance market.
Okay. We really are running over time now, so we're going to have to wrap up. So thank you very much to our audience. Hope it's been useful, whether you've been watching this live or you might be watching this on a recorded version later. Please contact Holborn Assets, contact Rob for follow-up inquiries or to appoint him. And otherwise, your overseas home as well, we're available for any other questions related to moving to Portugal or buying property there. And of course, thank you very much, Rob, for giving up your time. We appreciate it for
it's a
sharing
pleasure.
all your experience on the webinar. Small request, final request from us is if you have found this webinar useful, we'd really appreciate it if you left us a review on the review website Trustpilot. Otherwise, that's it from me and from Rob. Enjoy your evening, Rob. Thank you very much.
Great. Thank you very much. Have a good one. Take care.
Everybody. Bye-bye.
Bye-bye.